Welcome to TradeTheNBA.com. This is John. This reports for the 4th of May, one day shy of Cinco de Mayo, which, being here in Italy, we just celebrated Independence Day a little while ago under the quarantine. And why not continue to celebrate everybody else's Independence Days until 4th of July? Because even on 4th of July, we're still going to celebrate it here in Italy as well. So important, particularly these days where I think it's been a good education for a lot of Americans to understand what their rights really are, and this concept of, abuse of authority and unlawful actions, because I think you're seeing a lot of it with some of these lockdown orders, and I think the court cases are going to start piling up on it because some of these things that they're restricting are guaranteed as individual rights, and they're really not something they can overrule, but we'll see how it plays out. Market-wise, well, we got above the 61% here on the ES, then we had the dip below. Just couldn't find a buy within that first dip of the cyan coming below, and it continued to fade, and of course we hit that 2867 was a previous algo level from right here. We started at that from Friday's trade and just continued to fade from it. There wasn't a whole lot of interest. And this is what you're going to find, and it's something we talked about. Likely we expected to find some support rate around 50% because it's a simpleton way of approaching things, which more likely or not, that's exactly what the Fed is going to approach things as, is looking for a mean below and above, which is interesting that we have that 2735, which has also seen a significant amount of algo activity, and that's how it has to, happen in between. But this is pretty strong. DOC spike, it is coming with steel reset below the red right here, and could cross above, but until it does, it's still more negative than not. And then shakeoff drop off pretty darn quick. I mean, we went from we were plus, what was it, 7 or 8, 7.83, and now we're just at 1. So it's a pretty quick drop off. If you see a dip below the red line as the day progresses, that would be more significant. Of course, you see a magenta candle. It's too early to say that that's going to finish that way, but it certainly is a early warning to be paying attention to it. So we'll keep an eye on that. And from the NASDAQ standpoint, it came to the 61% level here, and right in between all these ABM values. That's the other thing. I'm not showing it on the ES to keep the chart a little cleaner, but you can turn on the ABMs and it gives you the same effect. Now, this was an interesting one because you had that higher high on a lower shakeout, and it was just a matter of waiting for the first beginnings of a drop there. Now that you have flattened gold with rising Azure, may hold up for a little bit while longer. It's usually when those flatten out or meet is when you would expect some kind of move, unless it's able to just really turn over quickly. But I don't know that we're going to see that kind of sell-off. I mean, everybody knows how bleak things are. This is nothing new. The question is, how much liquidity is the Fed going to provide, and are they going to continue to support price at key levels? More and more articles come out every day about the Eurozone disaster and really what it's going to be, the inability for it to come out of it. Now, we just started, actually today is the first official day here in Italy where businesses can actually, certain businesses can open. Much more travel. I mean, this weekend we saw, I would say, a 5-fold increase in the number of people out and about. Of course, they have to wear masks. No gloves are required, but and social distancing still. So all those things are still being practiced. But it's going to be interesting to see how effective this staggered opening of stores are, because really, I don't know how you would plan for it. There's just no way to gauge how effective it's going to be, because, well, one, we haven't tried it, and two, it's going to disproportionately affect certain people, and I don't know where the money comes from other people who aren't working and doing things to be able to afford some of the luxury conditions of eating out and things like that. So we'll see how it plays out, but again, the euro is just going to be bouncing around at these key levels because everyone who wants to talk about the dollar being devastated by this and that, they're just not really understanding. There's nowhere else for anyone to go. So you're still going to have to trade off the dollar. So the dollar should still remain strong until such point as there's a monetization of the artificial money being created. Because when you're creating debt, and all we're doing at this particular point is you're just supplying lost income with borrowed income out of thin air, because this is all the lost productivity. So there's no inflationary pressure or anything built into what's taking place. Yes, they're just going to keep adding to these deficit numbers, but you're borrowing money at zero interest and paying zero interest. It really isn't going to cost you anything. It's just a print, and at some point they could just eliminate it. Doesn't really mean anything, especially when the Treasury's issuing it and the Fed buys it. It's a non-existent thing. It's just more money in the money supply theoretically. From an oil standpoint, again, it's still struggling. I mean, you got all these oil tankers off the coast filled to the brims, and until you start seeing activity, we did start seeing some reports over the weekend that some of the activity for driving and that is starting to pick up. So if that increases demand, that could have a massive impact on oil prices and would create a significant spike in price. No question about that. From a gold standpoint, again, we still expect gold to continue to outperform. It still is going to become a safe haven, and that is really something that's in the back of a lot of people's minds, particularly as this never-ending monetization and money creation keeps taking place. There's going to have to be some baseline derivative that holds value based on something more tangible, because people always look for that. They're always looking for something that's a little bit more definable. Speaking of definable, despite some of the somewhat bullish constructs that had developed early, all we kept seeing was some of these negative prints. And another good one I wanted to point out is that when we get in between these spots where you don't have a dip back below with cyan, below red, and then coming back above, anytime I capture orange caught between the cyan and red, looking for expressed weakness, and in this case happened on this one right before you ended up with a magenta candle, which would do the same thing and sends you down to the short configuration. But overall, we really saw a lot of weakness, and we were caught between these two zone lanes of 2892, 2847, and literally just pivoted on both sides of it for quite a while, but really was unable to sustain anything. We never really even saw red get above zero. Got closest to it right here, and that was the peak move. And then once that began to roll over, you had the DOC spread that started right here, and then it was just a matter, and then boom, as soon as the orange dipped below, for me, that's just clean, and that sent it to new lows at that particular point, and then did the exact same thing right along the 2817. And how many times have we been talking about these levels? I mean, we've had these for quite some time now, and they haven't changed, and they're not going to. And see, this is the beauty of it, is they tend to repeat themselves over and over again. And then we came to Berkshire Hathaway's report, Buffett selling all of his airline and not being optimistic about it, as though that's going to cause the entire market to collapse. No. He was bullish on it when Obama got elected, and bearish, under Trump's situation. Now, is it generally bearish? I don't necessarily know that that's actually true. It really depends on how quickly things open back up and the psychological impact of the consumer. This is really what is the unknown. Gauging how affected people are about returning to normal behaviors, i.e. eating out, doing things like that. That's really going to be the gauge as to where we go with all of this. So, quick collapse in futures took us below that 2794, but they weren't going to have that, and they brought it right back up in between the range. So we're between that 94 and 2817. And when it does come to, it was clearly right here marked in our Sigma event. This was a significant downdraft on the dip going below. And whenever you have a negative number shift to the positive, that rarely works out well from an upside standpoint. You can see the same thing is developing at this particular moment. So potentially we're looking for maybe those lows to be revisited. We'll see. But as you're looking at it, though, it took quite a few bars before it actually rolled over, and that's the importance of that, is that it takes time for them to build a position before they're able to unleash it. It's rare that they happen immediately. That's usually some other kind of cataclysm that takes place in a more rapid version. But more likely than not, there was a short cover taking place from here, and then as it popped, there was a new add-in that went on, and then boom, sent it below, which allows for a short cover rally that brings you right back into the same range and repeats itself. This is what we're going to expect, and you're going to love this volatility. It's fantastic. I mean, it's just a matter of capturing each of the different segments in between and going with each of them. I'm not afraid to be both long and short at any given time, simply because you're going to have beautiful volatility waves in between. And that's intentional because it's designed to take out the tight stops that a lot of I don't want to say novice, but even weak professionals will do this because they're of the uncertainty and the higher ATRs, the average true ranges, tend to terrify people. And those are usually the best opportunities if you're able to follow your signal and stick with it. So bear that in mind. You have to go with what the signals are as opposed to what your beliefs about certain things. While we can express certain ideas, again, at the end of the day, the market is intended to go against the vast majority. And it does that on purpose because that's where the money is. When you bet against the crowd is where you make your biggest bank. And so if there's a big direction to the upside, going to the downside. If there's a big directional push to the downside, you shock them to the upside, which is exactly what happened here. And now the expectation then begins, well, where do we go from here? And that's when things get a little muddy and tend to move sideways because there isn't one group in control. And that's typically when a market trades in its normal wave action. So the psychology, and literally markets are psychology. And you really have to understand the psyche of why, and it really makes things a lot clearer. And that's what the algos do for us. They give us a broader sense of what these people are doing in advance so we can react to it. Plain and simple. As always, though, trade well. I will be on the Skype chat to pop in and give up any unique setups that develop along the way. Trade well.